Singapore's total employment has grown for the fifth consecutive quarter, largely due to hiring in the construction industry. Unemployment rates have also fallen back to pre-pandemic levels as economic activities have picked up. But the Manpower Ministry also notes quarterly retrenchments, they rose. One analyst warns that more layoffs may be ahead. Clara Lee with this report.
Construction firms are leading the way in hiring workers as the sector clinched new projects. It's among the industries that pushed up Singapore's total employment.
So roughly we are hiring about 15 to 20% more. So I think we do have a core strength of staff, and what we are hiring is to add on to that strength because of new projects that come on board.
Singapore's employment grew by over 230,000 to nearly 3.9 million last year. The lifting of travel restrictions last April meant more non-residents were hired. The festive season also led to a surge in employment among the F&B and retail sectors. The number of unemployed residents fell by 3,400 over the quarter, from September's 70,800 to 67,400 in December last year. This brings it to below pre-pandemic levels. But there are troubling signs. Retrenchments have increased on quarter, exceeding those of the previous three. One analyst says there may be more layoffs in the outlook ahead, especially for some firms that benefited from the tech boom during the pandemic.
The huge demand that we saw that led to a huge binge hiring in industries that were, I suppose, facing incredible demand for their services during the pandemic period. That's eased off now, so some of these so-called excess labor are being let go.
He adds that a projected economic slowdown could dampen hiring sentiments across all industries.
So exactly how concerned should you be about the recent rise in retrenchments? Well, let's crunch the numbers for you. Nearly 3,000 people lost their jobs in the fourth quarter of last year. They were largely let go due to restructuring or business reorganization. The tally was more than double from the previous quarter, though. Still, the Manpower Ministry says that it's still within the quarterly range that was seen in 2019. Most of the jobs were lost in the manufacturing, construction and services sectors. And meantime, 900 manufacturing workers were cut. That corresponds with Singapore's slowing domestic manufacturing performance amid weaker global demand for electronic products. The wholesale trade and information and communications industries also retrenched workers. Big tech firms such as Shopee, Meta, as well as Twitter, they have recently announced mass layoffs amid challenging economic conditions. Now, these brought total retrenchments to 6,454 last year. That was lower than pre-pandemic levels. The Manpower Ministry warns that retrenchment could still be elevated in upcoming quarters, though, but it does add that the tally is unlikely to spike up as demand for labour remains strong.
And the prospect of more job cuts also pointed out by the labour movement. NTUC says unemployment rates and layoffs could go up in the first 2 quarters of this year. It's citing ongoing uncertainties such as the consolidation of the IT sector and falling demand for goods such as electronics made by the manufacturing sector. NTUC Assistant Secretary General Patrick Tay says inflation is expected to remain high and the cost of living will remain a challenge for all. Mr. Tay is hoping the upcoming budget will help alleviate some of these ongoing challenges. And all signs pointing to an uncertain labour landscape moving forward. To assess this, we're joined by Barnabas Gan, Senior Economist at RHB Bank. Now, Mr. Gan, let's stay on retrenchment. Electronics and tech sectors are largely responsible for this large jump in retrenchment quarter on quarter. And of course, we heard before we crossed you another analyst saying that the tech boom, which is petering out, could be one factor in this. Is this something we should be looking out for?
Well, I guess let's just revisit the reason for at least the slowdown into the fourth quarter and likely into the first half of this year. I think what's interesting to really note is that we are looking for likely of a slowdown, especially in the external front. for Singapore, the external trade, and that would mean that because Singapore, we produce, to more so to export, we are trade reliant, and as such, when there is a slowdown in trade, the manufacturing sector will also decline, and with the natural, consequence, to other parts of the economy, labor included, and that's where, some weakness in, the labor market might be seen. Going to the tech sector, I think that a lot of the weakness can be brought down to two fronts. I think first and foremost really is that we may still be looking for higher interest rates by the FOMC in the first quarter, and that also because of the fact that China is actually the biggest importer of, semiconductor chips, and that would mean, it's too early to say if China is on the springboard to better growth, into this year. But I think what we can really say is that any slowdown in the Chinese economy will still be detrimental to Singapore's economy, especially from the chips front.
Barnabas, last year, the tech layoffs, it was a worldwide phenomenon as well. It didn't just hit Singapore. You talked about the fact that in manufacturing, that could be vulnerable as well as there's a slowdown. Are there other sectors that might be prone as well that we should be looking out for this year?
Well, I think that we already saw the global tech sectors really slashing jobs, across the world. So I think one of the few more cautious sectors that that keeps me awake at night would be the information and communication sector. And of course, if trade, especially export demand, trade demand globally, more so continues to slow into the first half, that will also mean that the export, that more so the wholesale trade, industries will also be affected as well. And also if that would mean that at least from the manufacturing front, as I mentioned just now, on the semiconductor chips front as well, I think that would be something that I'll be watching out
So
for.
that would be on the back end as well as the front end, those kinds of jobs?
Yeah, but I think more so the consolation really is that what we do see is that the services sector would be something that I would be more more bullish or more positive about, simply because of the loosening of border controls, and that would mean that other sectors, especially what we've seen in the fourth quarter, is really telling, because we have seen the seasonal uptick in labor demand, especially in the F&B, and the consumer-facing fronts in the fourth quarter. And,
Mr. Gan, since you're on the note of looking on the bright side, let's look at some good figures. So for the whole of 2022, the labor market improved significantly compared to 2021. Unemployment rates have returned to pre-pandemic levels. Of course, in all this, you are stressing things that could go wrong. So the Chinese economy, other things affecting the global outlook. When we look at these bright figures, should we be aware of that would bring these figures down in the quarters going forward?
I think generally, at least from our view, we are not looking for a recession. And in Singapore's context, we are not looking for a technical recession in the first half of this year. And that really means that any slowdown in the economy and really consequently on the labor market will be temporal. And that means that we may see more clarity in the second half of this year, especially when the FOMC starts to pause on rate hikes during that period of time, and when risk optimism comes back into the global economy, and when trade demand starts to return again in the second half. That means that some of the weakness that may be seen in the first half will actually be dissipated into the second half. What I may still be concerned about really is if there is going to be a higher than, or faster than expected rate hikes by the FOMC, or if supply chain congestions come back into play, and we have seen that and in MOM's paper, whereby they did mention that geopolitical tensions might be something that be one of the concerns for the labor market, and that really means that at least from the geopolitical tensions front, to me really it's all about supply chain congestions. Yeah, and we have seen that in Russia and Ukraine, higher oil prices and stuff like that, and China. Less of geopolitical tensions, but if the pandemic concern starts to exacerbate again, in China, that will, the revisit of, supply chain congestions and lift commodity prices, and that would mean, again, another slowdown in trade, activities over again.
Yeah, the global economy is still seeing the pressures of those disruptions to supply chains. Certainly, when we look at this issue of the labour market, though. Companies are still hiring, some of them. Some sectors, they still need people with skills, the right people for the right job. What do you expect for 2023 in terms of this notion of whether we're going to continue to see a tight labour market?
I think labour market will likely still remain tight, and how do we define tight really is at around the 2% handle. Singapore, one of the Asian economy has the luxury of having such low unemployment rates, and that really means that labour market may soften in the first half given the risks that I've mentioned, the global slowdown as well as trade slowdown and, the weakness in China and high interest rates and so forth. But the marginal uptick in unemployment in the first half might just be very marginal. And that means that, at least from the labour front, we will still be very much better compared to the pandemic levels that we have seen. And in fact, maybe even better than pre-pandemic levels.
Oh, thanks so much. We've been speaking with Mr. Barnabas Gan, Senior Economist at RHB Bank. Thanks so much for joining us.